We got some economic data this week, some good, some bad. Let's go over it. US unemployment came in higher than expected, meaning unemployment is rising in the United States. Initial jobless claims came in lower than it did last time, which means there are less people applying for unemployment. Read this for clarification. Now, we also did get some inflation data that came in, which I'm going to go over after I go over this unemployment thing, but we're going to take a look at why unemployment rising is so bad. And we're going to do that based on this chart that I made. It's beautiful. I know. What this is unemployment from the 1950s all the way to the present time. The blue is unemployment. The orange is the stock market, hence the title. And you see these purple boxes? Those are all recessions that the United States had. But let's take a look at an example, okay? This is May of 1990. Unemployment bottomed out, started to rise, and shortly after, we had a recession in 1990. Stock market didn't do too well. That's a much bigger correction than it looks. Not sure how much that was, but that looks like 20-30% correction. And keep in mind, this orange line is the Dow Jones. Okay, back to another one. This is November 2000. Unemployment bottoms out. It starts to rise. Shortly after that rise, a recession kicks in. Boom, the beginning of a bear market. Okay, and you can see this time and time again. Unemployment rising, recession, unemployment bottoming out, starting to rise, recession, unemployment bottoming out, starting to rise, recession. And now we are getting a bottoming out and starting to rise. Is a recession going to come? If we're going just based off of the data, it seems highly likely. Now, we already know the stock market is extremely overextended. Let me know what you guys think about that. Do you agree with what I'm saying here with unemployment rising correlating to a recession or stock market crash? Because it just seems like we are constantly getting mixed signals. And I said I was going to talk about inflation, which here we are. Inflation came in and it came in a lot lower than expected. Now, could this have something to do with the data being skewed for whatever reason? Probably. But that's a really good number, good for markets, good for the economy. Let me know what you guys think about this. Nothing in this video is financial advice. I'll see you guys in the next one.